Welcome to the Lend Academy podcast, episode number 224. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech. Lending and banking connected. Go to lendit.com/USA to register. Today on the show, I'm delighted to welcome Sam Graziano. He is the CEO and co-founder of Fundation. Now, Fundation have been around for many years. In fact, Sam was one of the speakers at the very first Lend It back in 2013, so he is somewhat of a pioneer in this space. I wanted to get Sam on the show to really talk about the small business lending space and how it's changing, how his company has evolved, and they've pivoted a couple of times really from the way they first approached this space. And we talk about how they're approaching bank partnerships. They're one of the leading companies now providing white label solutions for banks in the small business space. We talk about the future of small business lending. We talk about, he provides his thoughts on Amazon and Square and PayPal and much more. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Sam.
Thanks for having me, Peter.
My pleasure. So I like to get these things started by giving the listeners some background about yourself. And I know you've been doing Fundation for some time now, but maybe tell us sort of what your career background is.
Sure, thanks. So I actually spent about 10 years on Wall Street before starting Fundation in a couple of different capacities. First as an investment banker doing M&A, corporate finance for an array of different types of financial services companies in banking, lending, asset management, et cetera. And I also sort of spent some time in that same arena in doing some private equity work as well at one of my prior firms that I was with. So my whole career before Fundation was oriented around financial services companies across a bunch of the different verticals within financial services. And so, it was a pretty decent springboard for me to go ahead and start Fundation.
Okay, so then what was the idea? Did you have like an aha moment, or what was the driving force behind starting Fundation? Yeah,
so actually I had started the company with a co-founder of mine. His name is Doug Gordon, and he and I went to the same alma mater, which was Bucknell University. Me being many years ahead of him. Met him at an alumni event. He was talking about an idea oriented around crowdfunding business loans. And this is many years ago. So at the time, the only sort of comparison was really, Lending Club and Prosper, which you obviously know those stories extremely well, to state the obvious. And I had started following those companies at the time, when I was a banker. And I thought it was interesting, what they were doing around bringing, consumer loans online and sort of dividing them up through a neat syndication process. And I hadn't seen anything like that being done in small business lending. And so I decided just to start to work with him to help develop a thesis. Ultimately, the thesis, became, we felt small business lending was underserved. And I think that was in large part driven by, what the media was saying, what you could read from, SBA white papers, et cetera, et cetera. But, the format we decided to try and initially build the business was, not a true peer-to-peer format. We had started life, trying to just bring institutional capital to a platform, because we sort of had the theory, from, my experience having worked with asset management companies and really to sort of really scale capital supply, it was going to need to be institutional. And so I at least sort of felt the retail component wasn't necessary, and really the core value prop, of the business was going to be bringing a better suite of products to the market, that could, be something better than, let's just call it, the daily pay products that were on the market at the time, and serve the businesses that weren't being served well, and do that through a I guess what's come to be known as a marketplace platform approach, but using predominantly institutional capital.
Right.
But the story has changed dramatically since then, and I'm sure that's what we'll spend a fair amount of time on today.
Yes, sure. So, well, maybe we could just get right into sort of the evolution of Fundation. I mean, you started off obviously doing this direct to small businesses online. Why don't you tell us a little bit about how that's evolved and how your business evolved? I know we're going to talk about bank partnerships quite a bit in this conversation, but sort of when did you first start thinking about being kind of the engine for banks to do their small business? And just tell us a bit about the evolution.
Sure. The most fundamental point is we're actually not in the direct marketing business at all today. That was one of the cornerstones of how we got started, which was, we thought we were going to use various direct-to-customer marketing techniques, whether that was mail, digital, or otherwise, to drive people to our website and to provide them, with a loan. We thought that would be a good business model. We at least made the determination that wasn't going to be the way we were going to be able to succeed. I think what we had found was, the sort of quality of the customer population that we were able to drive, or that we even thought we would ever be able to drive to our site, was not going to fit very well with sort of the type of products that we were looking to bring to market, which was, something in between, where banks play in terms of, term, in terms of cost, and sort of where some of the, sort of the well-known companies in our space play in terms of, term, cost, et cetera, and sort of structure of those products. And I think those models can work very well, if, and I think there's been some scenarios where that does work very well, for folks that have a wider buy box than we did, or at least where we had started. Mm-hmm. And so that started our journey of thinking like, okay, well, this doesn't seem like it's going to work so well for us, at least. What's the right approach? And we really started to think about, origination channels. And what we realized, and I think what a lot of the industry, across consumer and small business, do realize is that, one of the cornerstones of value creation in this market is, your acquisition channels, right? And direct is one. And if you can do that very well and develop a brand and which takes a lot of time and money, that is one that can be very successful. I do think, there are some challenges to that one long term, which we can get to in a minute, and then there are others, which are, things like what Green Sky has done, which is develop your sort of own, dealer network. And there's a variety of different variations of how to develop channels. And we decided to take sort of more of an indirect approach, which is through partnerships. And that was sort of our first meaningful pivot, which was around the acquisition channels that we were going to focus on. And the next meaningful pivot, which we'll get to in a minute, is us as a solutions provider of providing our platform as a service to banks. And so we started down the path of, developing channels that were not direct oriented. We do still work with brokers today to some degree, some of the marketplaces out there, but we've developed some reasonably successful point of sale programs. We started working with banks actually as a referral channel. And, in the recent years, we've started to focus on, companies that we think will have, dominant mind share with customers and or sort of be able to provide some form of capital at the time of need or time of purchase. And that was sort of the first pivot for us as a business. Maybe I could just stop there, see if you have any questions before I get into sort of the next pivot.
Yeah, sure. So I'm curious about, maybe we could just dig in. Maybe you could give us an example of some of the partnerships that you've got and are these are partners driving to, this is almost like I presume, like acquisition channels. Because on your website, obviously you still have, apply now predominantly as a button in the top right of your homepage. So you're still getting customers flowing through directly with Fundation. It's just that I'm guessing that they're coming through these partners. So maybe tell us, like the point of sale one, or just give some examples of those.
Yeah, sure. So maybe I'll just sort of talk about them categorically and as opposed to sort of specifically, just because obviously you want to keep some things close to the chest. But yeah, we do have an apply now button on our website. And in fact, we've debated recently taking it off just because, we don't invest in it. So any of the traffic that's showing up is purely organic or word of mouth. And it's such a small piece of what we do that it's just sort of there as a matter of, as a matter of convenience, I guess, for customers that do show up. But we're not trying to drive anybody there. And so there are a few different categories. I mean, first is actually, banks. And we work with banks in a few different ways. One, which is those that we offer a white labeled, origination solution to help them originate for their own account. But what we do in those relationships is actually bolt on what we call a second look, which is the first service we provide is allowing that bank to originate their products in their name, at their cost structure, and then onboarding it into their systems, but using us as an origination capability through their channels. Mm-hmm. And then the second service we provide those same institutions is a second look, which is to say, hey, if we said no to that customer, could Fundation have said yes? And if the answer was yes, we give them a Fundation line of credit or loan. And that becomes, an acquisition channel for our own balance sheet, on top of it being a services business that we've got. We also have banks, and actually our first bank partnership was with Regions Bank back in 2015, and that was not a private label platform solution. It was purely just an integrated, referral program where, today and since then, every customer that opts in, to a second look that comes through their retail network or their business bankers and is declined by the bank systematically comes into our system every night, as well as customers that come to their website, where the bank really hasn't invested in their own online lending capability that sort of purely comes right to us. And so that was actually our first bank partnership, which was, again, not a fee for service, platform solution. It was an integrated sort of partnership around serving their customers that they weren't able to or willing to serve on their own. And that continues to be a pretty successful relationship for us and a good one, and has been in place for almost 4 years now. We've also got banks that actually refer us all of their customers below a certain amount. So we, publicize a relationship with a bank called Provident Bank in New Jersey, which is about a $10 billion bank. And, they're a very good commercial bank, but, really don't, have a capability or necessarily at the moment care to of their own that they've manufactured to provide loans below $250,000. And so all of those customers that come to the bank seeking that type of product, they just refer them directly to us, where we give them a Fundation loan or line of credit, right? So we work with banks in a whole different bunch of ways. And so, those are sort of the few categories there. We've also, as I mentioned, got some purchase finance or point of sale programs. We don't really talk about them too much. I probably won't go into too much detail here today on the podcast, because, we feel like we've developed some niches there that we think are, really rewarding for us in terms of the customer profile, the risk-adjusted returns of those opportunities. But, they're very different from, what a firm might be doing in the consumer space, or what a fund box is looking to do, looks like in the B2B space, where it's not e-commerce driven, right? It's more sort of by appointment through companies that are providing a good or a service or a product of some kind to a SME, and where a term loan or line of credit could help make that sale more likely or more efficient.
Right. And
that's been pretty successful for us, and is probably about a quarter of what we do in terms of putting assets on our own balance sheet. And then, we've been working with, some of the marketplaces for a long time, that are very well known in the SME space. We do have a, small network of commercial loan brokers that we work with, and then in recent year or so, we've really started to try and make a push into integrating our platform with, let's just call them payments and or other digital platforms that have SMEs that may need capital to facilitate a purchase, and or that those institutions just have, let's say, dominant mind share with SMEs. And so I think one of the things you wanted to talk about later on was, this idea of, just-in-time capital or capital whenever needed for SMEs. And we are a believer in that concept. Mm-hmm. I'll give you an example. We, in terms of a company that we've publicized our relationship with, which is a young company at this point, but, we've got high hopes for. It's called Tango Trade. And what Tango Trade does is they provide an escrow service to allow a U.S. importer who is buying, goods or equipment from a foreign supplier to use a sort of escrow service provided by Tango Trade. And so what do? We provide the funds that would go into that escrow account, right? And then thereafter be essentially the financing to facilitate that purchase by the U.S. importer from that foreign supplier. So it's sort of a variation of the point of sale type of a situation.
Right. Yeah, got it. Okay.
And, there are a lot of different scenarios like that. There's platforms that do all different types of things. And I am a big believer in the convergence of payments and credit in a variety of different ways. And that's an example of one that we're doing. So maybe just stop there and see what other questions you got.
Yeah. So I'd like to, like these different, the different companies you're working with here, do you treat each one individually? So I'm actually looking right now at the page on Regions sends small business loans to you. Obviously, I'm not a Regions customer, and I just went through their website and got this page that there's a page on Fundation.com, but it's obviously specifically created for Regions. Is that how you do it? So with every single partner you have, you just create a specific sort of page on your website, and then they all go through, I imagine, a similar engine on the back end?
Actually, no.
Okay.
But it's a great question. So we've tried to build our platform in a way where we can accommodate the customer use case based on how the partner wants us to interact with that customer, right? So that could be a situation like Regions, where if you go to regions.com, it'll basically drive you to a co-branded, online application experience. Mm-hmm. With our private label partners, to sort of state the obvious, I mean, we develop a customer interaction layer and, our customer interface and a banker interface that is, sort of built to their liking. Now, it often is adopting many of the things we've done from one bank to another, but, not always. And, we sort of, will configure it exactly to sort of how they want the platform and us to interact with their customers and or their employees. But as you start going into, some of these, there's just called platform opportunities or partnerships where we are providing our products, on a sort of on-platform experience of a third party. We've recently developed a whole suite of APIs that basically allow a third-party partner to, manage the entirety of the customer experience on their platform, both from application to sort of underwriting process to booking and thereafter, even initiating draws on lines of credit through their platform. And we did that because, again, I am a believer, and the rest of us here at Fundation are also believers that, that various types of platforms, whether they be payment platforms or otherwise, are going to have a lot of eyeballs from SMEs, in the future, and have some pretty good mind share with those SMEs. And, introducing credit in various customer scenarios will make a lot of sense, and they'll want to control the customer experience. So we need to give them APIs to be able to do that, as opposed to having to force them into our platform, if you will.
Okay, that makes sense. So then maybe just real quick, step back and talk about the types of loans you mentioned. You mentioned, term loans, lines of credit. Like, is this sub 500,000? What I presume it's maybe you just tell us a little bit of the range of amounts, interest rates, that sort of thing.
Sure, and so I'll distinguish for a second between what's on our balance sheet versus what we're helping our bank clients originate. So what ends up in our balance sheet is either term loan, so a fixed rate installment loan, which is very similar to what a traditional marketplace loan might look like, right, if you will, which is risk-based price, terms of 1 year to 5 years, but for us an average of around 27 months at origination, and sort of an average of around $55,000-$60,000 at origination, with APR sort of in the mid to high teens on average. Mm-hmm. And then we've got a line of credit product. Our line of credit product has been by far the highest growth product we've had since launching it, which we launched in 2015 or 2016, I believe. And, it's been very high growth for us because of the channels that we operate in, which again, I spent a fair amount of time a moment ago talking about the different types of bank relationships we have. And, what we found there is, the vast majority of the time, customers that are pursuing credit from a bank are looking for a line of credit, especially in the SME space, not necessarily in every category, but in the SME space in particular. And in the early days when we only had it alone, we were really having a tough time with conversion until we launched that line product. And since then, it's been a really successful product in terms of, driving conversion for customers coming through those channels. And as we've really gotten our sea legs under us with respect to, managing credit risk for that product, given that it's an evergreen product, right? It doesn't have a maturity date. We functionally have to rescore the accounts every 90 days to sort of make sure we're getting ahead of any degradation in the portfolio. but it's a great product both to serve what I think most SMEs actually need, which is managing, uneven cash flow, right? Differences between receivables and payables, right? Inventory, all the different things that, yes, some of them do end up getting a term loan, but I think, when you look at the Fed studies, the majority of customers want a line of credit of some sort. And so it's been very successful for us. And that's sort of our higher growth product today. It's about 40% of our portfolio and growing, both given the channels that we operate in and just sort of that's where customer demand is.
Right. Okay. So I want to move now to the banks, the bank partnerships. And I know you've been signing up. I keep seeing new ones, it seems, on a regular basis where you've got new bank partners that are announcing. So the first one I think I remember seeing, apart from the regions one we've already talked about, which is a little different, but I'm talking about the white label product. I think the first one I saw was Citizens Bank. Was that maybe you could talk us through, that product and the types of banks you're working with there.
Sure. So yes, you're right. So our version of, what, some of our competitors have come up with different brands for, like OnDeck, I guess, calls theirs ODX as an example. We don't sort of brand ourselves any differently in the market for that today, although, there is maybe an argument to make that we should be. We launched our first partnership with Citizens Bank in late 2017. Citizens is, I think, the 12th largest bank by total deposits in the U.S. Their footprint is sort of northeast New England into the Midwest, into Michigan, and down into Pennsylvania. I think they're about a $150 billion institution. So that was our first relationship like that. And our second, which we publicized, is Bank of the West, which is a subsidiary of BNP Paribas, which we had launched earlier this year, in January of this year. And we're actually imminently, I think it's next week, launching our next, which is a top 10 institution. And then we've got two more top 50 banks shortly behind that, all of which will be live and up and running, no later than February of this coming year. So, we'll have 5 of the top 50, and we've got a great pipeline behind that of doing this. And just sort of hit on your key question of what are we actually doing. These institutions are essentially, or they are, and shouldn't even use the word essentially, they're outsourcing the credit delivery function for certain of their SME credit product suite to us. And we perform that service for them on a private label basis, where we will do the application ingestion, which will be suited to the channel. So we'll give, their .com, an online application experience for customers that self-serve. Then we also offer the capability through their retail networks as well as their business bankers, to the extent the bank has a business banking team, to do sort of the application ingestion. We will then do all the decisioning. So we will be hosting the bank's credit policy on our platform. We will do what we call BPO work, which is basically white labeled manpower to actually deal with customers, to either complete applications or to do the underwriting, to do the sort of loan closing work. And then we hand the bank a product that they get on board into their loan management or loan operating systems. And we've done all the work from application ingestion through closing. Now, we do that again, they're not required to use a Fundation product, right? I mean, they are using their own products. We're purely providing, the pipes, the capability, the digitized experience, all that stuff for them to, more efficiently, more seamlessly originate their own products to their customer base through their channels. And it typically starts with us doing that for unsecured loans and lines of credit. And in bank speak, unsecured may mean like I have a blanket security interest against the business, but no specific collateral, let's say.
Right. Mm-hmm.
And then with both of those companies that what I mentioned that we're live with, we're also doing their business credit cards, as well as some other sort of similar ancillary products. And then what we're doing, now is, we're starting to move into secured products as well, whether it be equipment secured or owner-occupied commercial real estate and or SBA Express products. And because our objective is to help these clients of ours modernize the way they deliver all of their small business credit products, to give customers and bankers that sort of really simplified, unified experience, and to be able to do that across an array of different products to sort of help them modernize.
Right.
And so that's what we do. And again, like I mentioned, a while ago, one of the other things we also do in those relationships most often is, also give them a second look, which is, the primary thing that we're doing is trying to put assets on the books of the bank. But if the bank's credit policy says no and ours says yes, there's a chance to keep customers happy.
Right. Got it. So then, was it fair to say then the white label is focused just on the top 50 banks, and the sort of the second chance type program is for all the other banks? Is that sort of how you delineate it?
What I would say is, top 100 or so, I think what it comes down to is this, which is, in order for us to implement a private label solution cost effectively for us, ourselves, and for the bank, there has to be an expectation that there is some meaningful volume to do, right? In terms of unit volume, right? And therefore, generally speaking, banks of 10 billion-ish or so and higher, would generally fall in that category. Now, what's interesting is not all banks are alike, right? Like, we've seen institutions that are on the smaller end of that scale have the likelihood of driving a lot more volume than companies that are in the top 40 or so. It really sort of depends on what their historical orientation has been to small business. Do they or do they not have a business line which is dedicated to small business or not, right? One of the things that, is always bounced around the banking industry is, where does small business fit in, right? Is it within the consumer bank? Is it within the commercial bank, or is it its own thing? What we found is the companies that have the most success in small business, it's its own thing, but it may very well, roll up into the consumer bank or into the commercial bank. Mm-hmm. But, and then again, but then we've got, again, clients that say, hey, we're not ready or interested yet in a private label solution. We're really not looking to put these types of credit products on our balance sheet, but small business is very important to us because we've got a lot of deposit relationships in small business, and we want to keep these customers happy. And therefore, that may be a situation where they decide to just refer all those customers to us directly for loans, or maybe have a second look program or something like that, which is, that's where that type of arrangement might come into play.
Right. Okay. So I'm curious then, when you're talking with these banks, particularly the larger banks, I imagine if you launched in 2017, you started talking with Citizens a year or two before that. Is it easier to talk to banks today, given that I think there's much more awareness now of fintech than there was maybe 3 or 4 years ago?
I mean, without question, yeah. And so for us, on a couple different fronts. I mean, one is, obviously, we've got a pretty good resume at this point in the industry, and we've spent a lot of time at, a lot of the different events where we've gotten to know a lot of the leadership teams in small business banking, across the banking industry. So we're not strangers when we're having conversations with folks. They typically know who we are, and that's been very helpful. And our clients have been, really good to us, and because they've been very happy with what we've done for them. They've certainly been willing to talk to others on our behalf, which goes a long way in the banking industry. But the other is, yes, the idea of partnerships is out in the forefront, right, within the banking sector and all incumbent financial services companies, as you know. But I look at it a little bit more simpler, which is, I think that let's just call them incumbent financial services players have to become fintechs themselves, right? And I think they are. And I think the way they're getting there is different. In some ways, you do see some companies successfully, changing their operating model to have, what you would typically see in a fintech in terms of having in-house application development teams, product managers in the sense that we think about them of what should the technology do. And you're starting to see more of that, adopting agile frameworks in terms of the development that they do. And, again, it will depend on, where the bank decides or they want to develop that type of capability and to support which business lines. What we do, I think, is sort of give them that same capability or the same operating model, but through an outsourced arrangement, which means is we can give them the agility that they need to be able to compete in sort of the modern digital era, by virtue of the fact that, they're relying on us as the technology platform provider. It generally supports just that business line, and that business line can have a high degree of influence and control over what they want to do next and how fast they want to do it, as opposed to the old operating model, which is, I got to go back to the mothership and say, hey, does the IT department have any resources for me now or then the next year, right? Where you're sort of almost like a bargaining process. And I think the operating model is changing across the industry, both by virtue of the way I think banks are architecting their own internal teams, but also by working with companies like ours to sort of give them that capability and that agility that they need.
Right. Okay. So I want to switch gears a little bit and talk about your thoughts on the big tech companies. You got PayPal and our huge. I know the slightly different target market, and definitely Square as well is obviously much smaller businesses, but they're making that these companies, and Amazon are also have their own small business lending operation. I mean, these are companies with massive customer bases. Just thoughts on how you compete with those companies. Are you concerned about them? What are your thoughts on that?
Yeah, I mean, some of them yes, some of them no. In terms of being concerned, I think while those are scary companies to a lot of companies across a lot of industries, take a company like Amazon for example. Well, Amazon doesn't work with every small business, right? They only work with folks that sell on Amazon, and going back to what we were talking about a little while ago. I am sort of a believer in this concept of, capital becoming more ubiquitous, and the idea being that, the platforms that have a lot of data, a lot of transactional information on SMEs or consumers, or just have mind share, are the best positioned to give credit in various forms. And Amazon is a variation of that, but for folks that sell on Amazon. And I think, what's interesting about Amazon is when you've sort of looked at some of their history, when they've tried to do things that are very tangential to what they do, they haven't always had success, right? So it's not like just because they're Amazon, they can necessarily compete in every ecosystem. But certainly where they've got the right eyeballs, the right information at their disposal, they're going to be able to compete very well and extend a lot of credit to those customers. Square, I think Square is an unbelievably impressive company. And the reason I think they're so impressive is because of what I think is happening in small business. And I know, Karen Mills has talked about this quite a bit, this idea of these, platforms that provide an array of different services to an SME to sort of help them, sort of do what they do better, right? And I think what's happening in small business is more verticalized, right? Because as you know, small business, it's not the largest asset class from a lending perspective, but it's pretty complicated because it's so diverse and so heterogeneous. Mm-hmm. And what you've seen in this market is in very specific subsectors, whether it's restaurants or let's just call it, contractors and whatnot, you've seen some of these vertical sort of software platforms emerge to solve like the challenges of what it means to be a restaurant, right? So in restaurants, as an example, take a company like Toast or Square for restaurants, right? Or Upserve or Touch Bistro, right? What are these companies? They are, I call them business management software platforms, right? Which basically they provide a point of sale capability, right? So they have the POS system. Mm-hmm. They help restaurants with staffing, with their menus, with their online order intake, right? So they're building software that is specifically oriented around helping a restaurant be a restaurant, right? And you're seeing Square has done the same thing for restaurants. They've done that for retail, right, companies. Mm-hmm. And there are sort of mini Squares out there. And so I think what you're seeing in a few of these verticals today, and I think you'll probably see some more of them over time, that the idea of verticalization happening, because in order to solve, I think, the meaningful pain points for a small business, in particular for some of them, their needs are very specialized, and therefore the software that they use also has to be reasonably specialized as well.
Right.
And so what I think that's going to force banks to do, in particular, is to become platforms themselves, right? Mm-hmm. Which is, historically they've sort of been closed loop, which is the only product that a small business interacts with when they're, logged into a bank mobile application is the bank's products, right? I mean, the banks often have had referral programs with others, but they're not often tightly integrated. I think you're going to see a paradigm shift in the future, and not the distant future, in the near future, where banks are going to become a little bit more open architecture, if you will.
Right. Yep. That's going to be super interesting. Anyway, we're pretty much out of time, but before I let you go, Sam, just one more thing. If you could just Maybe tell us, as you look forward to 2020, what's on the horizon? What's next for Fundation?
So yeah, for us, we've got, like I said, a great pipeline of new clients that we'll be onboarding into our white label origination platform solution. So we look forward to publicizing those. And we think sort of, demonstrating that we're the clear leader in that market. And we've got some real exciting things happening in the lending partnership space as well, going back to what I said a minute ago around tightly integrating with different folks to really provide a great, sort of on-platform experience for SMEs. And so, for us, it's not any major paradigm shifts for us. We're continuing to just go down the road that we've been on for a while. And I think we are going to be able to get to a level of scale for our business, that will allow us to demonstrate we're one of the clear winners in the space, for the long term.
Okay. Well, best of luck with that, Sam. You've got a fascinating company. Well, congratulations on the success you've had to date. And thanks for coming on the show.
And thanks for having me, Peter.
Okay. See ya. One of the most interesting trends in small business today, I think, is this verticalization that we're seeing happening. And we're creating these ecosystems around industry verticals. And, Sam touched on Toast, which is in the restaurant space. There's others, there's Shopify doing in e-commerce, and there's MindBody Online in the wellness space. And there's many, many others. And these companies have tremendous insight into their customers. And I think all of these platforms are going to offer small business lending at some point, if they don't already, and many of the ones that I've mentioned do. But it's going to be companies like Fundation that can really provide, sort of the technology to making all this happen, because each vertical is different and you get a lot more homogeneity inside one vertical, and they're easy to underwrite. And I think it just makes sense that these vertical plays are going to become more and more important to a small business. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lend Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend Fintech, lending and banking connected. Go to lendit.com/USA to register.